99% of traders completely overlook SMT divergence. So in today's video, I'm going to be showing you guys exactly how I implement SMT divergence into my trading to find the highest probability setups possible every single day. Ever since I've been paying attention to SMT divergence in my trading, my win rate and performance in the markets has gone up substantially. So let's get right into SMT divergence. So SMT divergence is a divergence between two closely correlated assets. The SMT stands for Smart Money Tool, for those of you wondering. So say we have a move like this with ES on the left and NQ on the right. So you see that they're both reversing, right? We're making a move back up, but the difference is that ES put in a higher low and NQ put in a lower low. This is what you would call bullish SMT divergence. What's happening here is that smart money is positioning long. NQ just decides to shake some people out here, sweep this liquidity, makes a lower low, but ES makes a higher low. They both continue upward. So this concept is really helpful to use, especially if you come down to some high area of significance, like an order block or a fair value gap, and you switch to the lower time frame and you see, look, ES just made a higher low and NQ swept its previous low, and then they start getting some momentum back up. That can be a great time to go long. Now for the bearish example, same thing, right? Say ES makes a higher high and NQ fails to make a higher high and they both start moving down. And to clarify, this can happen on either one at any time, right? Sometimes ES will make the higher high and they'll dump. Sometimes NQ will make the higher high and they'll dump. But what you want to know, and most importantly, have both charts open at once when you're looking to trade so you can see if there are any divergences developing. If you're at the highs and you're looking to short, you want to short the index with relative weakness. Now, what does that mean? The one that didn't take out the highs. So in this example, we said NQ failed to make a higher high before dumping. ES did, right? We swept liquidity, we swept buy side, but in this case, you would look to short the index that's showing relative weakness. Same thing if you're going with a bullish example. You would look to go long on the index with relative strength. Now, usually when you have a good SMT play out, it won't matter much in the end because both indexes are closely correlated, so they're probably going to continue to run up if they are putting in a real reversal, but it is advisable to trade the leading index, aka the index showing relative strength for longing or relative weakness for shorting. So now I'm going to show you guys a perfect example of SMT and why it's so effective to watch. So right here, we had a low of day up to this point that we ended up sweeping in the afternoon, right? And we actually also have this on ES. NQ is on the left, ES is on the right. So you can see that we swept this low, and then on NQ, we come down and make a lower low than that. And so we'll just kind of mark it out to help you guys visualize it, but we have this lower low right here. Now, if you paid attention to the last part, you can already see where I'm going, because on ES, we did not make a lower low. We made a higher low. Now, this ended up presenting one of the best setups I've ever seen. This was literally a free money trade. And just like I said a few minutes ago, we are taking ES in this example, right? Because it's showing relative strength for longs. It did not make a lower low, while NQ did. Now, if you look at this setup, it gave us an amazing inversion based on my model, right? We have this inversion right here. The SMT was the cherry on top. We had swept liquidity. We had an IFVG with good V-shaped momentum. And if you look at the 4-hour chart for some additional context on ES, we were actually trading inside of a bullish fair value gap that I will mark out right here. So this was a bullish fair value gap. And when you go back to the 3-minute, which was the good entry time frame for this trade, you can see that we were trading into it and we had this SMT divergence form. And look at that. We move right up. We make a new high. We move all the way up and make a new high. So that was just an amazing move on ES, all as a result of paying attention to SMT, right? If you're not paying attention to SMT, you still might think that this is a good trade. This is good by my model. You know, we have the 4 steps. We have the tap into a higher time frame for value gap. We have an inversion. We have a liquidity sweep. We have the V-shaped momentum. We have all of it, but the SMT is the cherry on top. This is literally a money hack. If you are paying attention and you see all of the confluences, right? Higher time frame for value gap, inversion on a lower time frame, liquidity sweep, V-shaped momentum, and then you have an SMT on top of that because like I said, this is ES. Now if we go back and we look at NQ right here and we'll just type it in that exact same spot, we had made a lower low. So ES was showing relative strength. You want to target longs on ES, and they just ended up playing out absolutely beautifully. A straight unmitigated move up right off that. And from the entry, we ended up rallying about 30 points into close. So it was an amazing setup, an even better trade opportunity. Now here's another perfect example of SMT, this time on the 1-hour chart. So on the left, we have ES. On the right, we have NQ. Now this is a higher time frame chart. So people are using this more to tell them the direction of the overall market, the trend. And if you look right here, between this low on May 25th at about 10 a.m., we have a divergence right here. And we'll mark it out for you guys so you can see we make a higher low on NQ and a lower low on ES. Now, what does that help tell us? That when we get this big dump down and take out these lows on ES, but we don't take them out on NQ, that we are more likely to reverse. And that's a good time to start looking for clues for a reversal. And as you can see, if you do follow my model, once again, we had an inversion fair value gap, this time on the 1 hour, which would have led to a great swing trade because we actually just end up ripping all the way up, making new highs, and the uptrend continues for much longer. So it is really important to track SMTs. They work on any time frame, right? Because price is fractal. So they work on the 1 minute, the 5 minute, the 1 second for all I care. They work on the 1 hour, the 1 day. Just pay attention to obvious SMTs. This was a very obvious SMT. And when we had this extremely powerful move down and failed to take out the lows on NQ, but succeeded in doing it on ES, I was immediately looking for signs for a reversal because that was telling me, okay, market's faking weakness. We're trapping sellers. And like it happened, we just end up moving right back up and SMT plays out once again. So if you guys watch my videos, you know my model, the 4-step model: tap into a higher time frame, fair value gap, sweep liquidity, inversion on a lower time frame with fast momentum. But I don't require SMT as a criteria for entry. However, I see it as a very important cherry on top. It's an additional bonus. If I see good SMT at lows or highs, I might have conviction to size even higher than usual into a trade. So I don't have it as a main criteria where I need an SMT to enter something, but it definitely helps me gather conviction in the trade. My best advice to you guys to start watching SMT is to literally just have ES and NQ charts pulled up both side by side. If you don't have 2 monitors, you can easily in TradingView just use this right here and pull up ES and NQ side by side. I guarantee you your trading win rate will improve if you have ES and NQ open side by side. Because if you have both these open, you're going to get context of the market and you're going to be able to spot these crucial SMTs that can help you make so much money and catch really big moves. So with that being said, if you're still here, you're probably interested in improving your trading. And if that's the case, make sure to like and subscribe. And click the link in my bio to join my free Discord and trade live with me every day. No credit card, no email, no BS. Just join up and you're in. With that being said, if you're still watching, you're probably interested in trading. If so, make sure to like and subscribe. I post educational content to help you all out all the time. And yeah, I appreciate you guys for all watching. I'll catch you in the next one. Peace.